And thank you all for taking the time to join this session. The topic is geopolitical risks and securities market response. I guess the way to think about geopolitical risks is factors which impact countries and nations, and how does that then in turn impact business consumer sentiment in a particular country. So in India, whether something impacts India domestically or something which happens around the world and what the impact of that has been in India. One of our panelists here is a capital markets expert. A couple of them are private equity M&A lawyers. So I think what I have asked them to do is just give us the practical, when you are doing these, all three are transaction lawyers, if you will. So it would be helpful to explain to you in plain terms what some of these geopolitical factors have had in terms of impact on their ability when they are doing business or transactions. I guess, and we'll broadly cover things like China, India, China, Ukraine war, some of those issues. We may briefly touch upon, it's not really geopolitical in that sense, but ESG and particularly G and how that impacts India, I guess, directly and indirectly. I'll start with Yash. I guess, Yash, if maybe you could pick up, how the impact of what is happening between India and China, just directly, and maybe some other bordering countries, and how that has had an impact in what you're doing and how you're working, and what you think is, in terms of securities market, how you are seeing things play out because of this particular issue.
Yeah, thanks, Sandip. So clearly, the geopolitical impact on securities markets and transactions is never been more felt than in the last few years. So given the variety of issues, it was clear that it was always going to be a challenge. But then we were working on this transaction called, most of what I'll say is in the public domain, so it's not like I'm telling you any state secret, but we were working on this transaction called the Zomato IPO, and we had suddenly Press Note 3. Now, many of you in the audience may know what Press Note 3 is, but simply the government of India came out with this note which says that if money comes in from any of our neighboring countries, then that needs to be approved by the government. Obviously, this was meant for China. Didn't say it in so many words because Pakistan, Bangladesh have anyway been prohibited to invest in India for many years. So I think it was largely meant for China. And how did it impact transactions? One, Chinese corporations were one of the largest investors in the Indian tech ecosystem, including, say, Zomato, Paytm, and many others. And many of them had come in through very complex convertible structures. They did not hold equity. They held maybe 10 equity shares and maybe thousands of convertible preference shares. So now we had this interesting situation that Zomato had to do an IPO, but it had no equity, so the conversions had to take place. And at the same time, you also had to issue fresh shares to reduce the price. If Zomato had done an IPO with its existing structure, the per share price for Zomato would have been 1,25,000 rupees per share. Now, no one can participate in an IPO where the per share price is 1,25,000 rupees. It's almost like buying a Berkshire Hathaway stock in an IPO. It can't happen. So we had this challenging situation that Press Note 3 prohibited us from, as in we had to reduce the share price. How do you reduce the share price? You do bonus issuances, you split the face value of the stock. Splitting was fine because it was not, we concluded legally it was not issuance of fresh capital because you're just splitting the stock. But bonus meant issuing fresh stock to Chinese investors. The law didn't allow it. But the press note said you could apply to the government. So we had many law firms and many advisors saying, let's apply to the government. The government didn't have a process then. And even today, none of us as advisors would hazard a guess on whether you'll get approval at all and whether you'll get it in a timely manner. So we had this interesting situation that all these companies in 2020, 2021 wanted to IPO, but had large Chinese shareholders sitting on their cap table. So if you see when Zomato IPO'd, Alipay and Ant, which were the largest shareholders, had exited from the company. Similarly, when Paytm IPO'd, again the same thing had happened. So the consequence of the geopolitical issues was that many of them may have had to exit from these companies pre-IPO, leaving a lot of money, which is not a great thing from investors, but this was one of the impacts. The other impact is in terms of, this is I'm talking about the cap table on the press note 3. The other impact is in relation to the companies itself. We had a situation where a company had major operations in China. And because it had major operations in China, there were a lot of issues with the investors coming in, which I'll let Jamie and others who will talk about it a little more in terms of the US-China trade war. But even that geopolitical issue has impacted Indian issues on a fairly regular basis. And maybe Ravi can cover it in a little more detail, this press note 3 is creating almost daily challenges for fresh money coming into Indian companies today. So it's a small Indian company which is wanting to grow, and there's a fund coming in from, say, New York, but the fund has 15% held by Chinese investors, beneficial ownership. Again, they can't invest into India. So now we've created these huge challenges where, because of our geopolitical issues, the securities markets are getting affected. We are facing challenges in getting the deals done, but I think that's just the reality.
Thanks, Yash. That's pretty useful. We've faced similar challenges. I think a question which came to us actually not too long back from a Chinese company which does manufacturing, and they in the electric EV kind of space. And the question was, please tell us how long will it take to get us approval, and you know, what's the cost? Both of those are questions you look at it and say, it could take between X and Y, we don't know if you'll get it. So you're not able to answer questions, but I mean, obviously, everybody has heard and, you know, you are aware of the tensions, so to speak, between India, China, and so there is the government, you know, which you have to keep in mind that they have their own set of policies, but the practical impact of that on whether what Yash described in IPO or whether what we describe today on a day-to-day basis when somebody is asking us questions on investment in India, I think those remain. And I think that's probably one example of a geopolitical risk where we see direct impact on what's happening in India. Good or bad, I think that's just the government policy, and we just kind of respect that. But I think that's one example, some examples here. Jamie, you know, one of the things which is happening around the world, again, India is not alone in the so-called, you know, being wary of China phase. The US also has picked it up a lot in the past 2-3 years, and the US-China trade wars, so to speak. Do you see that having an impact on India and the markets here? And how do you see that happening practically in terms of what you're doing as a matter of practice?
Yeah, thanks very much. I think taking a step back, we're probably living through one of the most interesting periods in modern history with a whole host of once-in-a-generation events coming one year after the other. Obviously for Brits, it started with Brexit, but you then had the trade war, you had COVID, you've got Ukraine, TBC what comes next. But I think of all of these things, the US-China trade war will be the most significant in terms of the far-reaching consequences and implications of it. It'll reshape the sort of economic order of the world to a greater or lesser extent, ultimately. And it's the sort of thing you could talk about for hours and hours, but just picking three aspects of it that impact day-to-day work for us as lawyers. First of all, there's a reweighting of where capital is invested in Asia. And this has been very significant, I think. For a long time, China was the #1 destination for foreign investment in Asia, and one of the fallouts of the trade war is that China's slightly less attractive now for foreign investment from North American and European countries in particular. Part of that is because geopolitical risks and tensions, unhelpful. Part of that is because of changes in rules. So, for example, it's not as easy now for Chinese companies to list on NASDAQ and US stock exchanges, which means it's harder to get exits from China. So that has an impact on deal flow and how people view deals there. And then part of it is there are a number of sectors that are of heightened concern, technology in particular, and I'll come back to that, where historically investors have tried to invest significant amounts of money, and for various reasons it's less attractive to do so. So China's slightly fallen out of favour. It will not go away. It's still the second biggest economy in the world. But a lot of investment that used to go to China is no longer going there. Sat in Singapore, what we've seen is a significant increase in investment in Southeast Asia and in India. And you guys will see the investment flow through to India far more than we do. But when you look at Asia, if you've got cap markets, tracker funds, or private equity funds, and you decide you want to pivot away from China, India is the natural next place to look ultimately. And that can only be good news for India. So I think that first aspect on where does capital go and why does it go there is quite important fallout of the trade war. Another one is supply chain disruption and change. This is still happening and will take some time to play out, but it will reshape how things are manufactured around the world. Countries like Mexico, Vietnam are very high-profile beneficiaries of it. I'd be interested if you guys think India's benefiting from it yet or not. And just last week, you had the CHIPS Act in the US, which is a version of this supply chain realignment where the US is trying to reindustrialize and bring semiconductor manufacturing into the US and away from Asia. So again, this will have an impact on deals and where investment goes. And then the final thing, again, just keeping it slightly brief because we could go on for a long time. The final thing is the sort of the not protectionist, but the localization of certain things. I mean, the CHIPS Act is a good example of this, but there's a whole host of protective legislation being passed in countries all around the world trying to encourage stimulus in the domestic countries. And I think in India, an example we've talked about is the fintech space and tech space where the government's trying to drive activity there and bring some of that onshore. So it might be interesting to hand over to one of the other panelists on that.
Yeah. And, just curious, because China has now rolled back its COVID policy, and are you seeing interest come back to China from where you're sitting, where there was this whole thing about Hong Kong, China, people were moving out, there was investment coming into India, others Asian, but are you slowly seeing, or has there not been any material change in that, in terms of a reversal of that? Are you seeing some of that?
Yeah, it's a really interesting question. Helpfully, I was in Hong Kong last week, so I got to see firsthand some of it. I think a lot of funds and clients are thinking if China is reopening, that they're cautiously optimistic, is how I would describe it. There's a cautious optimism around a lot of clients about going back into China. It will be on a much more selective basis than it was before. So sectors like real estate and education, are probably out of favour after the real estate slump and the rules in education changed dramatically. But other and technology will still be very difficult, especially for North American investors. But for example, there was a lot of interest in investment in Chinese healthcare. One of the lessons from COVID is that there's a need for investment there. So I think China will come back. Whether it will come back to the same extent it was previously in terms of foreign investment, time will tell. And I think that the overarching trend will be it'll be more selective investment in China in terms of sectors that are less politically sensitive. That said, I think just this week, one of the US investment banks released its latest tracker index for Asia, and it reduced its weighting on China, so it's going to invest more of its tracker funds elsewhere in Asia rather than China. So it's not a straight road. I think it's going to be an interesting journey.
Okay. And Ravi, he mentioned fintech, and I think, even the theme yesterday, globalization, but increasingly, whether it's the US, whether it's other countries, India specifically, how are you seeing things in terms of fintech, more localization, more protection of the IP locally? How are you seeing that in terms of what work you are doing and in terms of your day-to-day practice as a lawyer in India?
I think I'll answer that question and also get into a little bit more contextualization in the topics that we have on the markets itself and how they react. With respect to fintech and regulation requiring localization requirements, whether it's in terms of data or making sure it's largely in terms of data. I think, this is leading to a situation where a lot of requests are coming in on a daily basis from established businesses of just testing the business model from the legal perspective, saying that there's a raft of changes, especially on fintech, that are happening on a pretty much daily basis, which have an impact on going to the core business model. The newspapers are all talking about these kind of situations. So as corporate lawyers, and we do, as a firm, we do a lot of work in the fintech space, both advocacy, transactions, etc. We are seeing a lot of requests coming in for asking us to, again, give us an indication of how that policy is going to impact. We are seeing everybody's doing granular analysis. Lawyers are actually working with bankers and clients to focus on the business and commercial aspects a lot more than probably as corporate lawyers we've been doing before. You're testing the business model and seeing whether it works or not. Some entities are actually sitting out of the country. They've had huge offices which put in a lot of money in with employees. Like PayPal is a big one which everyone's heard about. They have actually shut shop and gone back because they're not very comfortable with requirements for localization. The VPN controversies that we had, where the government decided that they did not want, even though VPN providers had to provide data or access to data to the government. I think the last panel must have talked through some of these issues and privacy, etc. All of these things have an impact in terms of how business itself works and the future of the organization and the scale of business that they're looking at going forward. But just getting back to where the markets will stand, I think the testing will happen. Sandip, I guess it's if one of these fintech companies that are listed, we have a few of them, actually is forced to close down a part of their business because of regulation that comes in that they find that they are unable to comply. And clearly that can only have a bad impact on the stock, right? So I think if you look at it from a market perspective, I think markets always been pricing in risk, political risk, etc. But geopolitical risks are new for us because in many ways India is unique. We don't have capital account convertibility. So you don't have an ability to play in other currencies say other markets with larger corporates where they have various jurisdictions that they can actually invest in and try and see how it goes. So we are largely finding ourselves to be reactive because you see there's a geopolitical event that has happened. Certain market participants like FPIs or foreign hedge funds are now deciding whether they want to invest or change that around. So you are seeing fill-ups happening with domestic capital in India coming up and filling up that space. But I think eventually where you see is you're going to see Indian markets reacting, and then eventually it'll come down to the fundamentals of companies and the businesses in terms of whether or not they're going to be able to sustain it. Opportunities will come in with China, etc., as we are talking about, because there are companies who can, and it's both sides of the stick in terms of how you do your business, I suppose. Because if you have as I think Sandip, you mentioned, right? You had a client who had a large business. Yes, sorry, you were saying, right? You had a manufacturing base in China, and if there's an impact on policies, then what does it do to the value of the company and the price of the stock? So I think we're seeing all of that happening, which we probably hadn't seen before. Markets in India are still reacting more, but I think that is where the globalization and the localization scenarios will sort of intersect.
Right. So the other geopolitical risk or issue which has come up was February last year, the Ukraine war. Obviously that continues. So I guess, Yash, Jamie, maybe how has that had an impact in terms of your transactions, in terms of where India is? I mean, some of it we all understand, there's this whole oil issue, ability to get it. We've been able to, get it at decent pricing. But I think just in terms of where you see that impacting our practice, and Yash, you were mentioning about, can you even represent Russian clients? Are you somehow getting caught, which we've also had to question, is that can an Indian law firm represent a Russian client who's called out? Because there are sanctions, and that those sanctions, the breadth of it is fairly wide. And, maybe we can talk a bit about the difference. There was a exception in when Russia invaded Crimea, people could still provide professional services, but you guys have had to shut offices and things like that. So, I don't know. Yash, maybe you can start and then we can go to...
Yeah. No, I think this has led to very interesting situations. So one is, of course, I'll come to our example, but we're working on a transaction where the company is going to raise money in the markets. The money goes to the promoters. The promoters have operations in Russia. And that's, if you break up each transaction, company doing the IPO, money coming in, and then the promoter having operations in Russia, all of it separately is completely legal. Now the question which investors are asking on the road is the issue proceeds? Is the money from this transaction going to reach Russia? That creates the problem here. So I think we've had to give comfort that the money is not intended to go to Russia. They've asked, the investors and the underwriters have asked for a representation that, the funds will not go. Because remember, the IPOs of one company. Here we are talking about the seller of the shares in that company and how they are using the funds. So this geopolitical angle, which, as Sandip said, historically, 5 years back, 7 years back, the only thing which we would worry about was basic sanctions reps against countries like, say, Iran or Venezuela, or, there are 10, 12 countries who clearly no one wanted to visit or have anything to do with. But now the list has become so complicated and so, so complex that it's very difficult to conclude one way or the other. And the rules are actually also quite different. Europe has its own set of rules. The US has a different set of rules. Where do you find, India fitting into all of this in a market situation? And then, just coming to ourselves as a law firm, right? We have, there's a lot of Russians are making money. Oil, etc. The oligarchs have a lot of money and they want to invest it. They want to invest it in the Indian market, right? So the situation is, can we advise them in terms of setting up structures in India? Obviously, we're not advising them on English law or, Chinese law or American law. We're advising them on Indian law. So can we advise them and can we be questioned? Because our clients, we have clients, all the law firms will have clients across the world. The clients are asking us questions. Are you advising Russians? What is the percentage of your revenue which comes from Russian clients? So these are questions which we are being asked in terms of our own business, and it obviously is quite minuscule, fortunately. So I think, but that's the level of complexity. But I know, Jamie, it's much more complicated for you all than it's for us on this one.
Yeah, no, on a more practical, one of the questions we were trying to figure out is how do you even get paid by the, Russian client, keeping aside, because, there are limited mechanisms by which payments go between Russia and India. This payment for legal services is probably the last thing on the government's mind right now, and they've got other things to worry about. So how do you, even that bit was a bit of a thinking about. But Jamie, sorry, go ahead.
But sorry, we used to have this problem for Iran. Even before Russia, Ravi has expertise on this. Over a couple of drinks, he'll explain to you why he has expertise over this. But we had this, Ravi and I used to be colleagues for many years. And this complex situation where we would be working for Indian clients who had businesses in Iran, or sometimes Iranian clients who wanted to do business in India, but you had no way of getting paid. There was no way of getting paid for your service, maybe some oil. But I think more than that, there's not much you could do, But Jamie, sorry, you were going to answer that question.
No. It was for a while very complicated for international firms, but it did get quite simple quite quickly, and the rules became so difficult that most, I think all international firms eventually exited Moscow. So for us, that was obviously a terribly tough decision, because Moscow was our 4th or 5th biggest office in the network, and we had to close that down, and the staff there either moved to other offices through the HSF network or joined a successor firm. It spun out into a local firm that a number of our Moscow partners still work at. So that was very unfortunate in terms of the network, and a number of our clients were Russian clients, and essentially it's very difficult now for international firms to act for Russian clients. So they've dropped off a little bit. Personally, I had done quite a lot of work in Russia when I was in our London office, so it was quite sad. I quite liked Russia, so that was less good. In terms of impact on transactions, what it has led to in the PE space particularly is a real focus on the sanctions, warranties and undertakings and covenants that investors act for from investee companies. And those can be surprisingly difficult to negotiate, because sanctions applied in the US or in Europe are not necessarily applied by Indian regulators. So if you're an Indian company or a company based in another jurisdiction and you're being asked to comply with regulations that don't have any teeth on you, they don't bite on you, save for the fact that you might have a US investor, that can be a very difficult negotiation, and it can result in difficult business decisions being made if the company wants to pursue that investment, because there may be some business lines they'll have to cease. So that part of the deal has definitely got more difficult in the last 12 months or so, and definitely generates quite a lot of discussion. Invariably, the discussion is around pushing the limits of what can and can't be done, but the answer is that a lot of these investors are quite risk averse on this at the moment, I think. So they do err on the side of caution. So yeah, I think that's been the impact so far for us.
Yeah, I think what we found was 2021 was a market where everybody did everything. It was a great market for law firms, for raising money. 22 started, and then Russia war hit. It first started impacting a lot of the international kind of transactions. So if you wanted to issue bonds, if you wanted to issue things, all of that dried up. In India, certain kinds, we were certainly working on a deal where there was a large Ukraine import coming in a particular product, and that deal actually had to go slow, and it hasn't gone ahead. This was because of direct impact of what was going on with Ukraine, less with Russia actually, but more with what was going on with Ukraine. So we've experienced all of that, and I think it's settled now mostly. I think the impact internationally also has been on general interest rate increases and slowdowns happening because of Ukraine war, where that has had an impact, or kind of trigger impact, if you will, on India. So we've certainly seen that indirectly much more of what's going on with the Russia conflict, because it's had an impact on your international investors, international companies, those based in Europe, etc. They're all experiencing slowdowns. And so investment into India has seen some impact because of that. So a geopolitical issue like a Russia war, one is obviously sanctions, but the impact of that on the world economy and that on India, we actually saw some of that directly happening. What about you, Ravi? Is there anything you had, in terms of the Russia, this thing?
Yeah, no, I think, just picking up from what Jamie was saying, and from, I think, increasingly, at least as the Indian lawyers and transactional lawyers we're sitting out here, there is a bit of, especially of sanctions analysis that is coming in, especially if the client has some businesses outside of India. And that's where I think, and at least from this is more in terms of like how we all operate as law firms, right? I don't believe any one of us has like any kind of significant expertise in interpreting any of these sanctions, because these are all your EU or American sanctions that come in. So we end up educating ourselves, because even though the actual advice comes in from specialists from there, but we are necessarily involved in all of those decisions. And the one thing that is definitely there is like some of these things probably would have never been discussed on a transaction basis when we were doing this, like say 4 or 5 years ago, right? Now, these become part of the checklist questions that you're looking at, saying, do you have businesses over here? Do you think there's going to be an impact? And so it's a talking point for sure, very early up in the transaction basis. So I think the entire process now has enough references and situations where we are checking these things, as opposed to scenarios, say 4 or 5 years ago, whereas transactional lawyers, I don't even think we got into it till someone came and told us, hey, there's a problem on this, and then everybody started looking at it. So there are preemptive conversations happening pretty much at every stage of the transaction process.
I think, and what's your sense, Jamie? Is Europe, and is it going to come out of the hole, and is it, or are you seeing this go on a little bit longer? Do you think the Russia-Ukraine impact the world has mostly taken it into account and is moving on, or do you still see some part of it having an impact on business, impact on countries like India?
Yeah, for sure. I think in Europe, it's particularly acute. Just geographical proximity makes these things more acute anyway, but Russia was the biggest energy supplier to the European Union. It now is not. So that sort of change, will result in a period of friction or transition as they move to other sources of energy, and obviously these other sources are more expensive, which means there's less money available for other things, including investment in various things, and that will just cascade through the economy at all levels. So if people are paying more on their energy bills, then they're spending less money on retail, and that will impact various companies in various ways. Obviously, the energy companies have all had windfall record years, consumer and other companies less so. So you do see how that plays out, especially in Europe. I think as a general observation, if you track the trade war, COVID, and then Ukraine, you can kind of see a bit of the flow through in the various markets. So the impact of the trade war, primarily was supply chain friction. That was the immediate impact, which in turn drives inflation and rising costs and delays in delivering goods and things like that, which all feeds into ultimately inflation, which would have an impact on interest rates and things like this. But then before that really got the chance to kick in, COVID happened. And certainly in the West, a lot of the governments put in place very aggressive fiscal stimulus packages that led to the markets being flooded with capital through quantitative easing. They kept interest rates very low, and that led to this surge in the equity markets for 2 years, give or take, where it was that was the place to put your money because there was no money in the debt markets. And that ultimately manifested itself in things like SPACs and these other structures at the height of the boom. And then what's happened is, and obviously that has an inflationary impact as well, if you print lots of money. And then you have Ukraine happening, which again, why inflation has gone up, and you've got quite high interest rates around the world. It's why the equity markets are quieter. There's very few IPOs, but the debt markets are more buoyant. If you speak to private equity funds, their buyout teams are not very busy, but the private credit teams are absolutely maxed out, running at 100 miles an hour. So you can see how that's all flowed through into the various markets, and how these three different crises have all impacted things in their own way, but they all run into one another, I think. So yeah, but I don't know if that's played out in India to that same extent, or if it's been a bit different here.
Yeah, but I think what's happening in the world does impact India, that's clear. What I was hoping for, you'd say that 2023, the war will go away and everything will be okay on that.
I was worried the balloons were going to be aliens when the balloons were what's next. but yeah, I mean, hopefully, 23 is a good year.
I think the final thing we'll cover, and then we'll take some questions. It's not really, again, geopolitical risk in that sense, but one of the things which we are seeing impacts the markets here is ESG. And environment, fine, there's a lot of climate, there's a lot of investment, I won't touch on that. But I think what we are seeing is, and social kind of is, to me, always something which is question mark, how do you measure it? Then governance, which is the G, seems to have an impact on India. And I think I'd be curious about how you're seeing that. I think, can't say all this without mentioning, for example, what's happened in India in the past month, which is not really sovereign state issues, which is the Hindenburg, this thing, that's a private short seller who's issued a report. But the impact of, what's happening overseas, happening to the India market, and the other issues like Norwegian funds or some funds selling stock because they believe that governance is a big issue and therefore they will not like to hold, and other people taking the opposite view. So how are you seeing all this shape out, Jamie? And where does India stand, and how do you think of where India is in the spectrum of this particular analysis when you're looking at geopolitical risks and what our markets reform is? Obviously, India, I should mention SEBI, etc., are looking at various aspects of all of this, whether it is how do you measure it, whether it is how do you rate it. But I think just the fact that something outside India could have an impact of such magnitude in India, what do you think? And Ravi and Yash, happy to take your comments.
Yeah, sure. I think generally ESG is seen around the world as a very good opportunity for companies, in particular driving the energy transition and other various sort of good initiatives. So it's generally something that people are very optimistic about. You see it, just with a slightly different example for a moment, there was a spate of green funds raised in Europe and Australia and elsewhere, and they had very notional targets on their green credentials and the green targets they would hit. And then what's beginning to happen now with these funds is, well, what happens if they don't hit these targets or they're insufficiently green? What's the consequence of this? And there's talk of class action lawsuits in the US and Australia. There's criteria being developed by the EU government authorities to try and tackle all this a bit more closely. And it's an example of how what was probably a few years ago quite a nebulous concept, the ESG, how do you measure compliance and things like that becoming much firmer. I think generally across emerging markets, the G being governance is a focus for investors. And again, it's an opportunity to drive good developments in that space. I think what's really interesting with the Hindenburg thing is that it was all offshore. So here you have Indian companies, but it's US traded bonds, it's US derivatives that have caused all these issues. And how do Indian regulators view that, and how can they protect Indian companies from that sort of behaviour is a very interesting question, I think. But by the same token, big companies globally are all kind of at the mercy of this sort of thing. It's not unique to any one country or any one company. There's always scandals sort of involving one company or another, and there's always attacks by short sellers. So these things kind of go around a bit, I think. But I don't know what you guys are thinking on the ground.
I think from a practical perspective, the E is becoming very important. I think even a few years back, we were doing an IPO of a company which was in the business of selling oil in India. So where was it getting the oil from? What is the impact, say, in Indonesia? Because if there was challenges in Indonesia to getting it, that was clearly a problem. And even, Coal India as an IPO happened roughly 13, 14 years back. But if Coal India were to attempt to do an IPO today, it would find it much more challenging, because investors have many more questions today. They have clear, as Jamie said, this clear sort of restrictions on investing into these sectors, and that reduces the universe, because we are as a country at a different point in our development phase, right, where things like cement, coal, oil, power, these are all quite important in terms of for the next 10, 15 years of our growth for us to reach 5 trillion, whatever number we want to aim for. And I think how this gets funded and where the capital comes from is going to be a very important question. And of course, the need to get cleaner and cleaner and cleaner is going to be very important. So disclosures in the offer documents for securities deals will have more and more questions on that and what companies are doing to get to a point where they can meet, say, a SEBI requirement and then maybe a more global requirement so that they can attract investors. Because otherwise, the problem is going to be that you're going to struggle for capital. I think that's going to be the challenge for many of these companies, and which will affect growth for a country like ours. Ravi?
Yeah, I agree with both of you have been said and been saying. And Jamie, just picking up on what you said, I think it is a very important, relevant point that Indian companies, if you have global presence or you're tapping global markets and issuing instruments in global markets, are now effectively getting impacted by like what perception and thoughts are out there. I mean, since we're talking about the Hindenburg thing, I mean, there have been prior instances as well where this happened. India Bulls had a similar sort of like situation where there was Veritas who came up with a report. That is one of the challenge, I mean, like one of the consequences of like accessing global markets. And I don't think it's necessarily a bad thing because then you're just making sure that like if you're taking money from, I mean, if you're accessing global markets, then you're also then required to like be moving on to governance standards which are more global in nature. So maybe, I mean, we should be looking at this positively, saying that like these are things that like actually will help the Indian markets become stronger and better with more governance norms coming in, and that is good for Indian markets as well. Once the dust has settled on, like again, the immediate things and the other distractions and other ways of looking at it, I do think that like there is a good outcome that we can also look at, because this is how you actually import governance standards which we all know are better in the West into India through these kind of like situations.
Yeah, no, I think, you know, it is an evolving situation, but what Yash said is also important, that ultimately disclosures in offer documents are actually going to get more, you know, they will be looking at some of these issues more specifically, especially on climate and how are people saying they're ESG compliant, things like that. But I think what the securities market response has been to Hindenburg was also actually interesting, which was, you know, things happening outside, bonds being shorted outside, etc., and that the impact of that to the Indian equity market was interesting to see. I think we have about 3-4 minutes, so if there are any questions which we can field, or none, either way is fine. Okay. I think, you know, we are probably just about on time, right? I think it looks all right. If the panelists have anything else they would like to share, or anything else which, you know, we may not have added, but I would really like to thank each of you. Yash, Ravi, Jamie, thanks a lot for taking the time. Thanks everybody else. This was, you know, hopefully you got some bits of what we are going through in geopolitical risks and analysis as law firm lawyers, basically on the ground. Shivani, thanks a lot.
Thank you.